Australia's annual rate of inflation has jumped higher than expected in November, lifting to 7.4%. Joining me now live is Chief Market Strategist at InvestSMART, Evan Lucas. Evan, good to see you. Thanks for joining us. Yesterday's inflation read is being seen as good news despite it moving back to a 34-year high. Why is that?
Yeah, good morning, Danica, and Happy New Year to you. Good to see you for the first time of this year. Look, it is being seen that because the suggestion now is that we are actually at the peak of our inflation numbers. If you look at what was driving it yesterday, it was food, non-alcoholic beverages, housing, and also transport. They are the things that we refer to as volatile items. They are the items that have been fluctuating all over the place. And if you compare those three to October, they were down significantly in October and they've bounced up quite quickly in November. Therefore, if you take October and November together, that is why the suggestion is that we're getting towards the peak. Core inflation, which is trim mean in Australia, rose to 5.6 from 5.5 and isn't really taking off. There is every sign that we are starting to moderate through, and that is what's been taken as good news. If you look also at the interbank market, which is pricing the probability of rate rises, the expectation now for February 7, which is the first meeting of the RBA this year, is that the likelihood is a pause. So that is the other part of it, is that the more we get data, the more and more the data is suggesting that a pause is going to be the case. And that's why everything yesterday, despite, as you said, jumping to a 34-year high, was taken as a slight positive rather than it being another problem with the inflation headache we have.
And staying on inflation, the US is due to release its latest read tonight. Will it ease enough to appease the US Federal Reserve before its meeting next week?
Good question. Probably not enough, but it could ease the idea that instead of doing 50 basis points of rate rises, it'll be 25 basis points, would be their lowest since they started this hike season, which was around about April last year. Expectation tonight for US CPI is 6.5%. That looks a little bit low, but that is the consensus, and that would go hand in hand with what we saw in September and October for their read, and that would be a good thing. It would suggest that all of the work that the Fed is doing has happened. But again, there is a sign that maybe that's just being overly optimistic, that inflation's falling that fast, and some are suggesting that tonight could actually be a surprise, and it could actually create a bit of a headache.
Okay, well, we'll be watching that one closely. Now, this one's interesting. There's a new paper out showing that the great rotation in employment could actually be the great retirement. What's happening here?
Yeah, so there's been this talk all the way through the pandemic that, the ability to actually move your employment has got greater. And particularly in the US, it's referred to as the great rotation, the ability to move out of jobs you didn't want to do into things that you want to do, whether that's start your own business, etc. What the papers are now finding is that if they actually have a look at the participation rate in the US, for instance, it's also happening here in Australia, is that more and more people have fallen out of work and haven't come back. And the studies actually show it's because these people are retiring and retiring early. We know that about 1 to 1.5% of the population per year retires. It's currently sitting at 3%, which is obviously double for what you would expect. And it hasn't changed since 2020. So the same event happened in 21 and also in 2022. It means that in America, 3.5 million people have retired sooner than expected. In Australia, it's about 400,000. That's a big headache for government tax revenue. It's a big headache for the overall employment market. It's why it's so tight. And it just shows that basically people now want to just live their life because the pandemic has pushed it there. That's what the paper concludes. The pandemic has actually fast-forwarded people's expectations around work towards retirement sooner than expected rather than to a new job. Fascinating paper.
Yeah, it's amazing how the pandemic's changed a lot of people's mindset. Evan Lucas, we'll leave it there. Thank you very much for joining us.